Good evening, everyone. If you can hear me, I want to see 555 on the chat box. If you can hear me loud and clear, I want to see 555 on the chat box. Okay, I've seen a couple of them, and I want to say a big welcome to you, and congratulations for being able to take this step to begin this journey. Okay, so yesterday we did something on introduction to forex trading, and we introduced it to a couple of information concerning forex trading. Okay, so today we'll be looking at the second aspect of the introduction to forex trading. The second aspect. Now, to kick off, today we'll be starting with terminologies in forex trading. Terminologies, terms that you see or that you hear on a regular basis, or terms that you will use as a trader. Okay, so that is what these are some of the things we want to talk about today. So on my screen you can see we have the first one, PEEP. Okay, so if you're familiar with forex trading, or you've heard or you've done some study on forex trading, you hear of PEEP. He bought 200 pips, he bought 100 pips, he bought 20 pips, he sold 10 pips, right? So what a pip mean is the smallest increment in price movement any currency pair makes. Okay, so it goes both ways. It could increase, it could reduce. All right. So if we are looking at currencies, if you're looking at trading currencies, metals, there is a price. There's a price point where a currency is trading against another currency. Okay. Now that price point, they're usually in decimal places. They're usually in decimal places. Now, if you see on the example, okay, let me just make this a little bit practical. Let me make this a little bit practical. Now, if you're seeing my screen, what you're seeing here is a terminal that shows us a particular currency pair and and then if you can see my cursor, see this place my cursor is moving. That is where you see the price points. Okay, that's where you see price points. All right. This line, this gray color line of this particular market, the GBP, that's the pounds trading against the US dollar. So it's currently trading around this price point. Now, the last three digits, that's where you find the PEEP. The last three digits, that's where you find the PEEP movement. Okay, so when you have 580, okay, 580. Now the 580, that is the where we calculate the pips from. Okay, so the last three is where we calculate the pips. When the market increases in price, all right, it increases in pips. That is the value that we use in calculating the profit you make when trading. When it reduces, right, when those last two digits are coming down, that's reducing in price. That is how we also calculate. That's how I also calculate if you're making profit, right, and you're in the right position. That is how we calculate your profit or your money. So that is what pips. That's the function of it. So when you make a trade, the increment or decrement that the price point, this last three digits makes, that is what pips. That is how we measure our profits and losses in forex trading. Now that we want to look at is bid price. The bid price is the price at which the market, okay, or your broker will buy a specific currency pair for you. So if you're placing an order for a buy, okay, there's a price that your broker will place it, right? So that price is the bid price, while the ask price is the price that the broker will sell to you. Now, the difference between the bid price, the difference between the bid price and the ask price, that is what we call the spread, which is the third, the bid and ask spread. Now, the spread is different between how much you're buying a. So the difference between the bid price, the bid price and the ask price, that is the spread. It's just like when you go to Yabuki, right, to exchange your dollar for naira. Note that if you are going with dollar, the amount they are going to sell to you, the price that they're selling to you will not be the same with the price at which they are buying from you. So that difference is called the spread. All right. If you are following, please type 555. I want to see 555 on the chat box. If you understand what I've just said, what we just talked about, let me know if you understand before we go ahead. Okay, I'm seeing a 777. Okay, please, can you indicate where you want me to recap? Okay, the bid and ask price. Sorry, the bid and ask spread, right? Now, I said the spread is the difference between the bid price and the ask price. Okay, the price that the current market, the market is in currently. Now, if you're buying, they will sell to you at a different price, and if you're selling, they will sell to you at a different price. Now, the difference between those two prices is what we call the spread. I use an example of the Aboki exchangers, right? If you're going to buy dollar, even if you're familiar with Binance exchange, the price at which you're buying dollar or at which you're exchanging dollar, if you're buying, it will not be the same with the price at which when you are selling. Okay, most times you buy higher and sell lower. So now that difference, okay, if it is 50 naira, 100 naira difference, that difference is called the spread. Right? So moving on. Now we have a broker. We talked about broker yesterday. We said that a broker is a financial service company or an institution that helps you to have access to the financial markets. It enables you to buy and to sell foreign currency. Okay. Then when you hear the word long means that the current market, the state of the current market is that the market is increasing in price. It is buying. Sometimes you can hear something like go long. It means you should buy. Or if you hear the market, it doesn't like the market is long, it means that the market is actually buying, increasing in value. Okay. And then short is the opposite of long. Short means to sell, or means that the market is selling or is losing value. Okay. That is what short is. When you hear we go short, it means that the market is currently on a downturn, it's reducing in value. So that is what short means. So you hear let's go short, it means you should sell that particular currency, that currency will lose value. So when you do that, you expect to make some money in that direction. And then we have a lot size. Lot size. Now, a lot is a unit measuring a transaction amount. Okay, a lot is a unit measuring a transaction amount. Okay, so now you use the lot or a lot to tell the broker that this is the amount of this particular currency, this is the volume of this particular currency I want to either buy or I want to sell. So the lot, please, can you mute yourselves? I don't know why I'm having these. Please, kindly mute yourself, please.
Hello.
Yes, can you hear me?
Yes, I can.
Okay, thank you. All right, so, okay, I was talking about lot size. All right, let's move on. All right, so let's talk a little bit more on lot size. Now, a standard lot size means if you're buying if you're buying or selling or transacting on a standard lot size, it means you're buying 100,000 units of that particular currency. Okay, it means you're buying 100,000 units of that particular currency. That is what it means to buy or sell with one lot size. So that is the amount of that currency or amount of that particular instrument you're trading on that you want to buy. So from that way, you can now bring it down to 1,000 units, 10,000 units, 0.1 lot size, 1,000 units, 0.01 lot size, and 100 units, 0.001 lot size. Although the 100 units, 1,000 units minimum you can buy, unless you're trading on crash and boom, like indices, right? Volatility indices. That is where you can find pairs that you can buy with 0.0001 lot size. But if you're trading Forex and metal and cryptos and so on, the minimum you can purchase is 1,000 units, which is 0.01, which is with 0.01 lot size. Okay, moving on. Now, calculating profit and loss. We'll talk more about this when we get more practical, but I just need you to have an overview of what it is about.
Please,
Now, the value yes,
it's not showing very well on my screen. Like it's half, it's divided. The beginning of the particular words listed under the subheading is not showing fully on my screen. The starting point of this.
it's your network. Perhaps it's your network. Or can any other person confirm that this is the same way?
Hello guys, my screen is big and it's okay. I can see everything clearly here because I use
What I'm seeing is of one standard lot size is $10.
Okay,
Then
you
the
know
second
what?
one is size.
You know
I'm not
what?
seeing no.
Are you using your phone?
Yes.
Okay, try to rotate your screen and let's see.
Okay, I've seen it now. I just rotated my screen.
Thank you very much.
Okay.
All right. So I was saying the value of one standard lot size, right? The value of one standard, if you're using one standard lot size, that the value of one standard lot size is $10, right? Now, if you're buying, okay, if you're buying and the market, if you enter the buy position on a particular instrument and the market is going on that direction, is going long, is buying, now your profit will be calculated by the lot size multiplied by the number of pips that the market has moved up in your favor. Okay, let me make it a little bit practical. Let me make it a little bit practical. Now, sorry for the interruption. Okay, so now if you can see my screen, I'm trying to explain how the pips work, right? So, a standard lot size. Now, if you bought a standard lot size, if you're buying with one standard lot size at this particular point, the market is at 1.27665 thereabout. Now, if the market goes up in your direction, increases in value, like the last 2 digits are increasing in value, profit multiplies. So that is how you calculate the profit. And then if you are losing, if you're buying and the market is selling, right? That is, this figure you're seeing here is reducing in value, then you'll be losing. So the way your lot size, okay, your lot size multiplied by the number of pips you have from that by 10 using standard lot size. Okay, so we are trying to look at the lot size, okay? And so we are saying that the value of one standard lot is $10. And when you have, when you're buying and you are gaining in pips, that is how that means you're making profit in tenths. And then if you're losing, if you're losing, that is, for example, you are buying and the market is reducing in value, then you'll be losing in tenths. That is if you're using the value of one standard lot. Okay, from there now you can now have an overview of what the market will look like if you're using lower lot sizes like 0.1, 0.01, and thenceforth. Okay, but this don't worry, this will be more practical when we get into the practical part. But I just want you to have an overview, an idea of everything, so that as we delve in practically, you would understand. It's going to be flowing well with you. Okay, so you don't get caught unawares. All right, next. Now we want to look at how the market is traded. How the market is traded, right? So we have automated or robot trading. Okay, automated or robot trading. Now, automated trading is where people use robots, or what we call expert advisors to trade. Okay, so such trading is software based. You don't have to be physically active. You just plug in the bot on your terminal, and then it does the work for you automatically. Then we have discretionary trading. Okay, so these are people who trade with their feel, their discretion, they feel, or what they think the market wants to do, or what they think the market will do, or what they think the market is going to do. So they place their trade on that direction, and if it works well for them, they make their money. If it doesn't, they take their loss. And then we have technical trading. These are people, or this is the kind of trading where you use technical analysis, all right, which involves reading chart patterns, using trend lines, using your horizontal support and resistance level and things like that. So that is technical trading, all right. Using just reading your charts the best way you can, using indicators, whatever best way you can, but you're doing that based on the information you're getting or you're deducing from what you're seeing from the way the market is behaving on the chart. And then you make your decision. That is technical trading. Okay, these are the three basic ways the market is traded. Then we also have the fundamental trading. Okay, there are people who trade fundamentally. Fundamental trading means using the news, okay, economic events, what has happened, what is happening on the news, use that to make a trading decision, okay? So that is fundamental analysis of fundamental trading, okay? You analyze the market by listening to or watching or reading what is happening on the news. Is there inflation in this particular country? How would that affect the way the value of the currency will be? If you can be able to deduce that, then you take a trading decision based on that. That is fundamental trading. So these are the four ways the market is basically traded. Now we have three main types of traders. Three main types of traders. Before I talk about this, are we lost anywhere? Are we lost anywhere?
Record the number. Hey, and my phone there for that person. Sorry.
Are we lost anywhere? If you are understanding what I'm doing or what I'm saying, please type 555 as usual. If you're not following, 777 with the place you want me to, the part you want me to talk about. All right. All right. Thank you very much. So now let's talk about types of traders. Okay. And someone is saying 555 small. Okay. Don't worry. The lines are open. I think I'm on the group too. And Mr. Martins is also on the group. So you can text us on the group. You can text on the group if there's any part that there's a little bit of confusion, you can text us and we can address that much later to you. All right, so now types of traders. We have three basic types of traders. Okay, we have the day traders, we have the scalpers, and then we have the swing traders or the position traders. Now, the day traders are people who trade for the day. They are full-time traders, right? But their entire job is just trading. So what they just do is for that day, they scan the market and look for the best positions to take the entries of the trade, right? That is what they do. That is their job. Okay, so they take time to take a trade for that day, and they start whenever they want to. If it's in the morning, they start in the morning and then and end at night. But they make sure that that day they take their profit for that day and they are done with it. Okay, and then we have the scalpers. These people, they are a little bit almost the same as day traders, but they do not even allow their trades to even stay up to 20 minutes. They scalp. They just go for a little profit and they are off. A little profit and they are off. 15, they are done trading. So they just scalp the market for little. That's why it's called scalping. They scalp the market for little profits and off they go. All right. And then we have the swing traders or position traders. Okay. Some people call them swing traders, some people call them position traders. Now, the thing is, these people, they allow their trades to stay for a long period of time, a week, a month, even a year. There are people who take a trade in January and take profits by December. Yes, there are people like that. We have people like not Elon Musk, former president of America.
Hillary Clinton.
No, not Hillary Clinton.
Donald Trump.
Donald Trump. Thank you. Donald Trump is a swing trader. So that's the kind of trading he does. Okay, so these are the types of traders that we have. So it depends on you. The kind of money you have is also a factor too, for you to be able to decide the type of trader you want to be. So, of course, you will not have $100 and want to be a swing trader. No, before the market will even set to start giving you profit, that $100 will be gone within the day or 3 days. So it depends on the kind of money you have and the kind of patience you have and the kind of person you are. Then you will make a decision on the kind of trader you want to be, whether you want to be a day trader or a scalper. All right. We are going to the final part of the class today is trading sessions. So we have three basic trading sessions. We have the London session, we have the US session, we have the Asian session, and the European session. We also called the New York session, the Tokyo session, and the London session, respectively. Okay, so these are sessions where the market, okay, these are sessions where the market are usually volatile. Okay, so the London session, the US session, starting with the US session. Okay, the US session is a time when the New York market and the economy around that particular region are very active, and that is between 13 o'clock, that is 2 o'clock actually. It should be around 2 o'clock in our own time. This is in GMT, please. So GMT plus our own time to GMT is +1. So our own time, 2 o'clock in the afternoon till 10 o'clock or 11 o'clock, 10 o'clock in the evening. Okay, so that is the period when the markets, the New York markets, the economy there is booming. Okay, after that time it dies down, and then we have the Asian session, which is from 12 midnight or 1 o'clock. It usually starts before then. It overlaps with the US session around 10 o'clock thereabouts, but that's the period. Okay, from that period till morning till the morning, 10 o'clock in the morning, that's where you have the Asian session. And then the European session starts at 8 o'clock in the morning, okay, down till 5 o'clock in the evening. So that is just a summary of how these are the three major sessions in the market. Okay, these sessions encompasses most of the World Trade Centers. So that's why they are the most important trading sessions. So it's best for every trader to know the time that suits him to trade, the trading session that suits him to trade. That is why it's also important, because these times are when the market is usually very volatile. There's enough activities happening in the market. Although the Asian session is a little bit tricky, especially during the night. Okay, there are less volatility unless you are trading pairs that are in that Asian region, like the JPYs, okay, that's the Japanese yen. If you're trading pairs that has the Japanese yen, all the AUD pairs, those are pairs that are very okay, they are very good during the consolidating time. Market does not move very well during that period. Okay, so but basically these are the main trading sessions, so it is best for you to decide. But naturally, for us in this part of the world, it is best to trade between the London session, just within that London session, because London session overlaps with the US session. So from 8 o'clock to 5 o'clock, that's the best time to trade as in Nigeria. All right, so this is how we'll wrap up the class for today. We've talked a lot, we've spilled some information, and I want to believe that you guys have downloaded this MT4 on your platforms, your phone and your laptop, the MT4 and the MT5, whichever one you like. I hope you've downloaded them, because we'll be going practical very soon. So if you have any questions, you can throw them in right now. We have less than 5 minutes to end this class.
Okay, I wanted to ask, but this GMT, the meaning is Green Meridian Time, right?
Yes.
The meaning is what?
It's Greenwich Meridian Time, actually.
Okay.
Okay, Greenwich Meridian Time.
Yes. Okay. Further questions? Any other question from what we've talked about so far today? Okay, I believe there are no questions. Well, I'll also advise you go into a little bit more research on what we talked about today, a little bit more research, and then come back prepared tomorrow with questions. I'll be expecting them so that we can talk about them, and let's see how far you've understood what we've done for the past 2 days today. Thank you very much for making time to attend the class. See you guys tomorrow.
Thanks, boss.
Very much. God bless you.
Thanks, boss.
You're welcome.
All right, thank you very much for today. Instructions will be given to us on the WhatsApp group. The applications to download and the sites we need to have during the course of the practical. So that will be all for today. It's all instructions will be given to us on the group. Then also invite your friends to be part of this,
Boss.
program.
Boss.
Yeah.
Can questions be asked on the message section?
Yes. Yeah. You can drop your questions on the group, on the WhatsApp group, and then we'll answer it for you.
Okay.
Yeah. You just drop your questions on the group.
Now or tomorrow?
Anytime. Just anytime. You can drop your questions now. You can drop your questions tomorrow. We'll answer them for you.